Welcome back to talk about the markets, the way forward. Vikas Khemani, founder at Carnelian Capital Advisors, is with us on the show. Vikas, morning. This fall of 3 to 4% that we had on the mid and the small cap index on Tuesday and on individual stocks, a fall of more than 10%. Was it a bit of a one-off? Have we moved past it? Or are you preparing for a sort of a deeper correction in the mid and the small cap universe for the stocks that you hold in your portfolio?
So I think these kind of falls and corrections would come, in the markets especially when markets do rise very sharply. Any small amount of news flow can sometimes, trigger this kind of correction. And we have seen that, and we know that there was sort of a narrative which got built due to few events, which led to this kind of fall. But the fact that this has recovered again talks about the resilience of the market, the underlying trend of the market. So I continue to remain, of the view that Indian markets are solid. Stocks are very good. There may be some pockets of stretch in small and mid caps. One should avoid them. But having said that, the corrections will come in the markets. It's a part of the journey. Reasons will always be there. Reasons will come if they are not there. As long as one is invested into good quality companies and managements from a medium term to long term perspective, at least we don't get worried with that. Even we were not worried even for a second when the market fell and doubted the investment thesis as well as the long-term story of India.
Okay. Would you buy PSU banks at these levels, Vikas?
Yes, we have quite large overweight position in PSU banks. We do believe that PSU banks are in the on the verge of a big deviating. We have to understand that there was a time when all these banks were struggling with the asset quality issue, and then post that, they were kind of suffering from lack of technology implementation at their end, vis-a-vis private sector bank. But interestingly, in last couple of years, most PSU banks have implemented technology for customer services and for data lake, and where they can building data lakes where they can use a lot of digital technology to deliver fast service to their clients. So I think the earlier arbitrage, or the gap of not arbitrage but the gap of services between private and public sector was wide. That has kind of narrowed down. So we do, and another interesting part which has changed, which is a big good change in the banking PSU bank space is the management quality. I think now we have a stable 3 to 5 year kind of term at the top of the new CEOs. And the new CEOs are very, very well picked and chosen with a lot of positivity. I have met most CEOs in the recent past, and very, very positive change in terms of how they want to govern and run the banks. So I think all these things will take away the significant discount PSU banks have been trading. So you have a cycle behind you. You have recovery of NPS coming behind you. Your operating profits are growing. So there's no reason. And most PSU banks would hit a ROE of between 16 to 19 to 20%. So if that's the kind of return ratios you are operating at, I see no reason why the current kind of valuation would sustain. So I see a massive re-rating happening in the PSU bank space for the next couple of years.
Okay, got that. Vikas, thanks for joining us. Another space which has been buzzing a lot this week, and also, ever since the beginning of the year, is the auto pack. Do you think now with the festive season coming through, with all of the positive triggers that we've been talking about, it is still ripe for investment at these levels? Because a lot of these stocks have run up so much this year already. Do you think it makes them a little unattractive at these levels, or you think it's still good for more?
Like I said, that just because stocks have run up does not mean they have become unattractive. Auto sector continues to remain promising. We have seen growth coming to auto segment after a very long period of time, and typically whenever such changes happen, they do last. Even in the cyclical sector for a couple of years at least, if not more, so 3 to 4 years should be there. And within automobile space, we have infrastructure getting built, so newer cars are or newer vehicles will be needed. You have income levels going up, so more and more people will be buying, and you have companies coming out with interesting products. So I think combination of all these things should keep the auto stocks growing, and hence I see the sector continue to do well.
Okay, Vikas, another space I want to talk to you about is this entire primary market action that we're seeing. Once again, there are so many IPOs. We had Sami Hotels yesterday, we had Zaggle today, Yatra's IPO has opened. Is there anything from this new space that really seems attractive to you?
Look, again, bull markets always bring a breed of IPOs, and we're beginning to see a bit of a froth and risk getting built in IPO markets. So one has to be very, very careful. We evaluate IPOs with the same lens like we evaluate a listed company or long-term company business model management, and that's how one is. And more important is the valuation. In typically bull markets, some parts of the compromise happens on the quality as well as the valuation part. So one has to be very careful. The kind of oversubscription happening in this, especially in the SME IPOs and even some main board IPOs. We definitely sort of are worried about the kind of trend which is there. So time to be careful rather than just be blind about it. There are good quality companies also hitting market. And so, idea is just like anything else. You have to identify good stock, good management to bet before you subscribe or if you buy your listing.
Vikas, I know from our previous conversations that you've been very bullish on India's domestic demand, the capex cycle, the industrial recovery, and it's played out beautifully. Many of the stocks linked to India's industrial capex cycle have doubled, gone up 150% in a very short span, maybe 12, 18 months. The question is, from here on, are we closer to the end of the upcycle? Because cycles of late are also much shorter. They not necessarily run for 5, 6 years as we've seen in the past. So how would you rate India's industrial capex cycle? Are we still at the beginning, middle, or closer to the end?
No, very good question. Typically, how long did we have a bad cycle of the industrials? For a good 10-year period. So how can a 10-year period bad cycle of industrials, get over in 2-3 years period of time, right? So typically, investment cycles are very long and sustainable because and they happen in a step function. So if you did not have a good investment cycle for 10-year period, your economic demand was surely growing, might be at a slow pace. And now as the demand is growing, you need those kind of capacities. And more importantly, the additional drivers of manufacturing theme, government's significant focus on building infrastructure, which in turn has a link to industrial cycle. We have never seen this kind of investment happening in roads, railways, ports, airports, across the board. So if you have this kind of massive demand profile getting built, also driven by exports, so some of the triggers never existed before. So it's a combination of three things: the underinvestments in the investment of the domestic demand, the new demand in form of infrastructure which government has unleashed in last couple of years, and thirdly in exports. If you see combination of this, in my opinion, you will be doing injustice even if you believe that you are in the middle of the cycle. I would say we are, if I were to take a 5-7 year cycle, maybe we are in year 2. We have still long way good. And whenever such cycles do play out, go back and remember in 2001 to 2008, that cycle, stocks became between 15 to 30x. So it will be, unfair to stocks like L&T became 15 to 20x, right? So companies do change their trajectory when there is a tailwind, and many companies, become 10, 20, 30, 40 baggers in that kind of cycle. So hence, I would say that one should look at this big theme not with a narrow lens, but with a very, very big lens. And once you understand this, then you will not ask this question, where are we in this cycle? And I would like you to believe that it's a very long decadal trend, decadal cycle. It is not a short-term 2-3 year cycle. Cycles are becoming short in many segments and sectors, but this is not one of them.
Okay, got that. This is not a short-term kind of cycle because you're still sounding extremely optimistic on this space, and we're going to wind down on that note, but it's always great having you. So we hope to, have you back on the show very soon. For now, we're going to get into a short break. On the other side, we